स्वागत है आपका जी बिजनेस की खास पेशकश में। मेरे साथ विवेक लॉ हैं और हमारे साथ एक बहुत ही खास मेहमान हैं। हमारे साथ फ्रैंकलिन टेम्पल्टन के एग्जीक्यूटिव चेयरमैन मार्क मोबियस इस समय मौजूद हैं। मार्क, थैंक्स फॉर जॉइनिंग अस एंड वेलकम टू जी बिजनेस, इंडियाज लार्जेस्ट न्यूज नेटवर्क। इट्स प्लेजर हैविंग यू ऑन जी बिजनेस. Sir, first of all, what's your outlook right now on the kind of liquidity glut that is going on in global markets, considering that even on a negative news, global markets have sort of stopped reacting?
Well, you must remember that the so-called liquidity glut, it really does not exist at the ground level, because although central bank balance sheets have expanded dramatically in the U.S. and Europe and Japan, if you look at the loan-to-deposit ratios, they have been going down. Now, of course, the total loan amounts have risen, but not nearly as much as anyone would expect. And the reason for that is that the commercial banks have just been sitting on that money, putting it back into government bonds. So it's been a sort of circular development. So I expect something that's going to be completely different from what the general expectation is, and that is as interest rates rise and as the central banks pull back some of their liquidity, the actual market liquidity will increase.
You've been very bullish on the manner in which some of the issues that you felt India was missing out on have been addressed in the last 3 years especially. Where do you see the Indian markets going from here?
I think the Indian markets are going to continue to do very well in the long term. The Sensex, as you can see, has been doing extremely well. The economy is doing very well. Interest rates are coming down. As you know, just yesterday, the RBI lowered rates. So I think, all the ducks, so to speak, are in order for a continued bullish sentiment for India. Of course, whenever you have a bull market, you're going to have bumps along the way. But the Indian situation looks very, very positive. I think, however, that there is room for more aggressive rate cuts in view of the very low inflation and falling inflation you're seeing in India. So hopefully the RBI, as you know, the problem is with these central banks, and the RBI is no exception, certainly true of the U.S. Central Bank. They're always behind the curve. They're never able to anticipate what's coming, and therefore they're going to have to really move a little faster on their interest rate declines.
Dr. Mark, unfortunately, this disconnect between the RBI and the government policies, even Indian fund managers are suffering from this. Even yesterday, in the policy which RBI announced, market was expecting a little more aggressive cut. Now the problem is the cut was on the expected lines of 25 bips, but the commentary of Indian Central Bank, RBI, was also very conservative. Do you sense that disconnect between the ground reality or what is happening in the real economy and between how the central bank is perceiving?
Oh, definitely. This is definitely the case. And by the way, India is no exception. I mean, you find that all over the world, that, as I mentioned, central banks usually are moving too late and often not able to anticipate what's going to happen in the real economy. So, we have that situation in India. Of course, if you look at all central banks around the world, India's central bank is probably one of the better in terms of the intelligence of the people involved and the way they operate. But they still are behind the curve. And I can sympathize with those in the market who feel that, the policy objectives of the government are at odds with what the central bank is doing, at least with the speed at which the central bank is moving.
Dr. Mobius, you said recently, in fact, very recently, that, and you were talking for emerging markets, you said we are really on a tear. In the emerging market space, where does India stand out in your eyes?
Well, it stands out because of this incredible economic growth that you're experiencing. It's the highest among all the major emerging markets. So that's number one. Number two, the potential growth is even higher. As you know, India is lagging on infrastructure development, lagging on capital investment, and that's one area where if there is a pickup in that particular sector, India could be growing at even a better rate than we're seeing now. Another thing is that I think the government has to move more aggressively on privatization of state-owned enterprises, because one of the problems that we're facing in India is a lack of stocks to buy, so to speak, because a lot of the valuations of the major companies have gone up. If you look at the average PE, average price to book, the Indian stocks tend to be higher than the emerging market average. And that, I think, is probably one of the reasons why for this year, at least 1 year time period, the Indian market has underperformed the general emerging market index by a small amount. So we'd like to see more privatizations, more shares issued in the Indian market so that we have more choices.
But Mark, also, like you mentioned, that in next 1 year, the Indian market could actually underperform the other emerging markets. In that case, is it going to be a buy on dip scenario wherever you get a dip? Because the valuations have been stretched, and you're right in your assessment that there are very few options available at this point where one can freely go and deploy their money.
However, we're not going to be in a position to sell. In other words, the Indian market will continue to do well, but it, just as you say, will probably underperform the general emerging markets groupings. But I think investors have to be patient, and hopefully, we'll see more liquidity coming in for more stocks.
You wrote in a recent blog, Dr. Mobius, and again you were talking more in terms of the whole emerging market space, that there is enormous potential for small caps. Now many of them may be in the Indian context more of mid caps. But could you tell us a little about what your thinking on those lines is? Because, of course, while the bellwethers, the large caps seems to have run up, but so have some of the mid caps here in India.
Yeah, we in recent years have found more value among the small and mid-cap stocks in India. That's why if you look at our small and mid-cap funds, you'll see a lot of Indian names. And that's because of what I mentioned, because at the end of the day, the valuations for the large caps have gone up beyond what we think is fair valuation. Now, that doesn't mean that we're going to be aggressive sellers of those names. We'll hang on, but we'll probably be somewhat underweight of the large cap stocks.
Sir, also, if you look at the large caps, one pocket, I would say, which has clearly underperformed because of its own reasons, fundamental reasons, is the Indian public sector banks or the government-owned banks. Do you have any view on government-owned banks? Because there is a clear effort on the part of the government to privatize them or at least reduce the government holding in these banks. So how does it translate as far as stocks performance is concerned?
Well, that would be a big, big plus for the market. Because as you know, these banks are very big. They represent large market capitalizations and more stocks. In fact, it would be a great policy for the government to now issue some of those stocks, release those stocks, and reduce the government holdings because the valuations are, very fair for the government to sell now. And for the investors, it gives them an opportunity to have exposure to this high growth economic situation that you're seeing in India. So it's going to be a win-win for everybody concerned, I believe.
Dr. Mobius, you wrote on July 13th, and this was more specific to India, where you said that there are challenges in the implementation of GST, and you were, of course, giving a view on the situation at that point of time. You were bullish on India. You said inflation is moderating. You believe there was room for easing. You've already talked about your views on what transpired yesterday in the monetary policy. But you also said that we still face bureaucratic barriers. And so two questions here. One is, now that we are about over a month into GST, so far seems like a fairly smooth rollout. Secondly, the bureaucratic barriers that you talked about, what according to you can India do better to actually move further ahead?
Well, I think one of the main issues is the move by some states to add new taxes. Probably they're doing this to make up for any potential reduction in the income they get from the unified tax. So I think this is one of the things that is self-defeating, so to speak. In other words, you don't want to add new taxes while you're introducing this new unified tax. So I think that's one thing that we have to watch very carefully. And of course, it depends on the state and the situation. But that was what I was mainly concerned with: the fact that these bureaucracies at the state level are introducing these new fees and taxes.
Sir, if we link this rollout of GST, as a precursor to rollout, we did see a lot of traction or a lot of outperformance in some sectors in Indian markets. So the entire organized retail stocks were outperforming. The logistics space was outperforming. We have seen auto stocks doing well. We have seen FMCG stocks doing well. Now, especially the auto and FMCG, they constitute a large part of our index also, the Sensex, in terms of their weightage. Do you think they will continue to command this kind of ripe valuations?
I think when you're looking at that sector, we have to be very cautious. And probably one of the reasons why investors have been somewhat cautious is the entire development of electric vehicles globally. If you see the development in China, in the U.S., and so forth. And some people are fearful that the Indian companies may be behind in this development. Of course, you have Tata with Jaguar and Land Rover. I'm sure they're working on this technology. But in the vast Indian market, this is something that has to be addressed rather quickly by these companies. And probably that's the reason why, I know that's one of the reasons why we are a little bit looking askance at these companies. The competitive environment globally, of course, is fierce, but at the local level, there has to be a lot more development, because that's the trend for the future.
Dr. Mobius, you recently talked about three sectors that really excite you. Again, you were talking more in the emerging market context, but like to get your thoughts on India as well. You talked about consumer products, staples, retailing, automobiles. You talked about consumer finance, and you talked about internet companies, the Internet of Things. Are these the three sectors that you're looking out even when it comes to India? What are the other sectors that you think have a lot of potential going forward?
Well, you're right. We have been spending a lot of time looking at the entire IT development. As you know, globally, the emerging markets index's heaviest weighting now is in IT, whether it be in the chip design, whether it be chip manufacturing, internet companies like Alibaba, and so forth and so on. So for India, this has to be an area of great interest, considering the fact that there's so many Indian entrepreneurs globally in the U.S., Silicon Valley, and elsewhere who have made tremendous strides in that area. So we expect more and more of that to happen. Of course, India has lagged a little bit behind on the hard manufacturing because, as I said, about the bureaucratic barriers to manufacturing, capital investment, et cetera, you're not going to see much in the way of manufacturing for the global market, cell phones, smartphones, that sort of thing. But as the government moves ahead with their reforms, then there's a tremendous potential for India to be manufacturing and taking over a lot of the manufacturing that is now done in Taiwan and China in terms of all of these instruments, whether they be cell phones, iPads, whatever. So this is one area which is going to be something we're looking at very carefully. At this stage, of course, the emphasis more is on the internet-related companies and also the outsourcing companies.
I mean, you spoke about the hardware companies, but what about software? If you look at companies like TCS or Infosys, which form the backbone of Indian IT story, they are actually facing a lot of headwinds from, I would say, Mr. Trump. Yeah,
I think, but you got to be careful on that one. I think Mr. Trump's statements are one thing, but what he actually does is another thing. And of course, I sympathize with people who are concerned, and I've seen that we see how Infosys stocks have come down from their peak back in last year, middle of last year. But I think there's a temporary phenomenon. I believe these stocks will pick up again going forward, because at the end of the day, these companies have become global. They're not dependent only on the U.S. In fact, they're in the U.S. They're establishing themselves in the U.S. So the likes of Tata, Infosys, you see them moving sort of sideways, but I think they will pick up again going forward. Don't forget, there's a lot for them to do in terms of AI, virtual reality, et cetera, et cetera. These are big, big areas of growth going forward.
Dr. Mobius, there is a lot of talk already beginning to happen that are we overvalued? The fact that our markets are hitting all-time highs, are we getting into a bubble zone? What is your reaction to that kind of a commentary or fear or rumors, whatever you want to call them?
Of course, on a historical basis, there's no question that the PEs, the price-to-book values, are high. But, you can't look at those indicators in isolation. When interest rates are down, you can justify a much, much higher PE ratio. Even if interest rates go up, if inflation is higher than the interest rates, then you can justify high PE as well. So, of course, the gap between where India is now and the other emerging markets is pretty great, because you've got India roughly at about 18 times and emerging markets roughly about 13 times in terms of price-earnings ratio. In terms of price-to-book, India is now about 3, emerging markets generally about 1.7. So these are big gaps. But it also speaks to the expectation that people have regarding India's growth. Because if you're in a high-growth environment, you can certainly justify higher valuations. I would not say we're in bubble territory at this stage.
Sir, to that extent, I would say that your view is slightly different. In last 2 months, every global fund manager that we have spoken to, most of them have predicted a not exactly doom scenario, but a major correction in global markets led by US. And in fact, some of the fund managers even suspected a 50% fall in market valuations from this level. I mean, what's your reaction to that?
A lot of people, you must remember, a lot of the people who make these commentaries voted for Clinton. So they're not too happy about Trump. So there's a tendency for them to be biased against Trump. But just look at the S&P 500 index. Is it going down or is it going up? That's the question. And the reality is that it's going up and reaching new highs. So the commentary that you're getting in the press in the U.S. generally is more biased against Trump and against the economy generally. So I think you've got to be very, very careful, regardless of what your political orientation is. You've got to be very careful in drawing conclusions.
One of the big changes that has happened over the past 2 years, and I'm sure you're very pleased about that, considering that you've been flagging this off for the last 20 plus years that you've been coming to this country, has been the strong pickup in domestic flows. From a country where people just, most people didn't even know what a mutual fund is, even though we're still very small in terms of percentage, but at least you're seeing a very, very strong momentum building there, where domestic money is moving into the stock markets and largely sticky money through the systematic route, through the mutual fund route. Is that something, and the feeling is it's only going to grow even further. We haven't even scratched the surface. What could be the implications of that? Is that something that pleases you, that it's no longer just an FII dependent market anymore, and Indians are actually putting their money in financial assets more and more?
Exactly. I mean, this is the most exciting thing because, people can put money into financial assets when they have money. In other words, when their per capita incomes go up beyond the basic necessities. And we're finding more and more Indians in that position where they have enough to save, they have enough to invest, and this is going to be a very, very big trend. And we're just at the beginning of this. If you look at the percent of Indians who have cell phones, I think it's running, 80% or something like that?
That's
but
right.
Smartphones have not come in yet. Now, as the smartphones are distributed, going into 70-80% of the population, that's going to be a game changer in many directions. Because as you know, with a smartphone, you have access to, thousands and thousands more bits of information, millions, I might say, of bits of information, which can increase productivity and increase the effectiveness of the work that people are doing. So I think it's going to be a very exciting development in India.
But that reminds me, sir, of the telecom space, because as far as the telecom service companies are concerned, there is a major tectonic shift taking place in Indian market. So you have one large player entering, Reliance Jio, which has practically changed the dynamics of this entire industry. And the other players, incumbent players, are suffering under the heat of the price war that is launched by Reliance. What is your take on the telecom space? Because that's again one space which has a lot of weightage and it's large.
Well, yeah, for the industry, of course, for those incumbents, they have a real problem because Reliance is going in, and Reliance is using the technique that you're seeing in the internet space generally. The whole philosophy is winner take all, and forget about making money. Just get as many eyeballs, as many clicks as you can, so you push out everybody else and you dominate. So I think that's the game that's going on now in India. And of course, from the consumer point of view, it's very positive because it means that the cost to consumer is going down and they're getting more and more bang for their buck, so to speak, or bang for their rupee. So I think it's a very positive development from the consumer point of view. Now, of course, we're going to reach a point where so many of the incumbents have been merged or pushed out that you have a oligopoly or monopoly situation, and that's where we're going to have to be very careful. As you know, in the West, there's a lot of concern about the dominance of Google, the dominance of Amazon, and you might see government stepping in and trying to do something about that. So that's down the road. I don't think we have to worry about that at this stage of the game. The bottom line now is that things are getting cheaper and more effective for everybody.
How would you rate Prime Minister Modi's performance?
Terrific. We're really amazed by what he's been able to do in the face of a very, very complex and difficult situation. So I would say, he gets very high marks.
All right. So can you just quantify the number? If you have to rate Mr. Modi and Mr. Trump on a scale of 1 to 10, who will get how many marks?
Well, for Trump, it's early days. So I think we have to go neutral on Trump. We have to see what are the impact of what he is going to be doing. So I would say so far, he's probably above the average, probably maybe 6 or 7. But Modi is probably 10. So that's a big difference.
Right. All right. So last question to you, sir, before we say goodbye. Do you, looking at the current setup and the kind of confidence that you have in Indian markets or the Indian economy or Mr. Modi, I would say, because Mr. Modi in all probability is going to come back in the PMO. Going by that logic, is it fair and is it reasonable to expect that Indian markets can actually double in terms of market cap from here in next 3 to 5 years?
Yes, definitely. There's no question about that. It definitely can happen. I mean, you see the Sensex, where it's going. We're headed up to, 34, 35 very soon. But you got to remember, there'll be corrections along the way. But no question, that's quite possible, particularly if Modi moves ahead with more privatizations. That will be a tremendous boon to the market.
All right, sir. Thank you so much for joining us. Pleasure having you on Zee Business. You just spoke to 100 million viewers in more than 150 countries of Indian origin. Thank you so much, sir. Pleasure.